Welcome to the Daily Fortune, where we talk about the latest topics about finance and investment. But before that, please don't forget to click the like button, subscribe, and hit the notification bell so you'll know when we upload a new video. Now let's get started. In the past year, the words Gamestop may have rung a bell, together with the stock market, Wall Street bets, and even Robin Hood, as they were associated with the most controversial financial news stories of the year. This is due to the phrases of how GameStop share is overstated and that it is bound to crash. It takes a lot of trigger points before you're even allowed to think that one stock is bound to a crash. Even Michael Burry, a physician and American investor, knows that it takes a lot to predict a stock's destination. Burry takes this prediction seriously, and you'll certainly know it because he's not just risking a spoon of his wealth but billions of what was his. If you ever doubt what's out there, Burry's words are the ones to consider, as his bets are not just for a one-time big-time thing. He has a record from 2000 to the first quarter of 2008. He generated millions of dollars for his investors due to his predictions that had a return of an average of 28.6% per year. And so he's brave enough to lead $1 million worth of prediction over and over again. And so as they say, even if you have an analysis of your own, Burry's words are one to consider as well. Although the people outside finance didn't get to know him until 2015, few believed in his predictions back in 2005 when he bet against the housing market. He has proven himself more since then. But despite his track record, some people refused to believe him when he claimed bigger predictions. That is, the collapse of America is bound to happen as well, and that this will cause a huge impact to the cryptocurrencies and even metals. A point to consider in his prediction is the inflation tied to almost all financial matters of a society. According to Burry, the government is inviting inflation with its MMT-tinged policies. MMT is short for macroeconomic theory, pioneered by American economist and theorist Warren Mosler in 1992, along with Bill Mitchell, a university professor based in Australia. Under this theory, the government need not borrow money since it can just print more depending on the demand. If the economy is in a dramatic crisis, it can just supply money by printing on its own. And that if the economy is booming, it can just pull back through taxes and wouldn't have to print much money. And although this is being used by the Fed or the Central Bank of America right now, not everyone supports the principles that are attached to the effects of MMT. Even the Fed chairman himself, Jerome Powell, said, "The idea that deficits don't matter for countries that can borrow in their own currency is just wrong." This was when he spoke before the Senate Banking Committee in February 2019. He stressed that the purpose of the Fed, as the central bank of the U.S., is to maintain the stability of the financial system and to achieve full employment. Warren Buffett is also a known critic of MMT. One of the reasons as to why it is not receiving a unanimous support is that with the same proposed solution, Austria, Hungary, Poland, and Weimar Germany was actually led to a devastating inflation during the first half of the 20th century. And according to Thomas Sargent in the famously documented 1982 classic, The Ends of the Four Big Inflations, it was due to the printing of money and monetizing debt. High debt to GDP ratio. With how the debt is reaching all-time highs, this only connotes a negative implication in the country. In a debt-to-GDP ratio, the GDP acts as the income, and so a high debt-to-GDP ratio could only mean that the country isn't producing enough to pay off its debt. Even the M2 money has already reached its all-time high, meaning the country has already printed more than enough money to cover such debt. When the debt is high, the banks won't be able to loan to the government for more sources to pay off debts. The government won't be able to provide the services due them. Taxes will increase since it will be the only source of monetary value that the government can use to pay its debts. When taxes rise, the people will have less for consumption, which will in turn affect the businesses by lowering their income and which will then cause them to lay off workers. And the effect will just go on and on. As this was the case we were expecting, people were actually wondering because instead of failing businesses, establishments were actually rising, and this was even indicated by the rising charts of PMI over the years. This tolerates the idea that there are actually resources that could pay off the debt of the government without resorting to the production of more supply of money by printing the same. The only reason that Burry sees is the existence of hyperinflation. Or how else are you going to explain the lack of supply for all the consumers despite the booming economy? Burry couldn't help but to look back as to how this actually happened to Germany. As he tweeted, prices in Germany were steady, and both business and stock were booming. The exchange rate of the mark against the dollar and other currencies actually rose for a time. he said. In his another tweet, he relayed how in those times, it was only the wealthy people who could actually afford such circumstance, and so people in poverty resorted to committing crimes as a way to cope up with the rising prices caused by such hyperinflation. According to his series of tweets dated February 20, 2021, the situation in Germany during those times had actually built and prepared for a massive blow to which Germany was not aware of, the building up of all the effects of the hyperinflation. People will only take notice of the evident collapse happening in front of them. But the moment that the hyperinflation happened, when the common people could no longer afford a much easier life due to the shortage of money even when everything around them was booming, there was actually, according to Burry, already a collapse. And just as how every problem should be, you could think there should also be ways to protect what is yours and your daily needs from hyperinflation. There are assets that are very much worth the investment for being appreciating in nature, such as lands and jewelries. But according to Burry, in such an event, the government will try to control all the assets available to the people. In his own words, according to his tweet on February 18, 2021, he said, "In an inflationary crisis, governments will move to quash competitors in the currency arena. #BTC, #gold. People might disagree with him as Bitcoin is decentralized and cannot be controlled by the government, but what Burry sees is the long-term effect caused by the nature of decentralization of the crypto. He was talking about how the rise of crypto was made of a lot of leverage, and so a small dip of price could also cause a huge amount of decline in the prices. This is the very reason why Burry ended up saying in his yet another tweet, "If you do not know how much leverage is involved in the run-up, you may not know enough to own it." And so you may come to wonder, what then could be the only way to subdue the effects of this hyperinflation that is supposed to affect even those investments we may find safe and secure? There are actually a few key words that should be right in mind when talking about hyperinflation. These are words that don't seem to appear very lively, but they are actually essential to the crash of the market. Capital costs. Capital costs are costs associated with one-off expenditure on the acquisition, construction, or enhancement of a significant fixed asset, including land, buildings that will be of use or benefit for more than one financial year. Input costs. Input cost is a set of costs incurred to create a product or service. In a setting where hyperinflation exists, it is best to invest in companies that know how to maximize their capital costs and minimize their input costs. Pricing power. Warren Buffett, an American investor and a billionaire, sees the pricing power as the most important factor. It is your power to increase the value of your hard work through your products without losing to the competitor that makes your business a good business. The effect that increasing or reducing the price of a product has on the demand for that product. Interest rates. An interest rate tells you how high the cost of borrowing is, or how high the rewards are for saving. So if you're a borrower, the interest rate is the amount you are charged for borrowing money, shown as a percentage of the total amount of the loan. This is how those who are quick to fail in an inflationary-driven environment go down even more. It is due to the obligation being added up onto them by borrowing money and acquiring loans on top of their wanting to survive in such a crisis. These are the components to which Burry considered in betting for those he seemed to think was about to crash. Like how he bet against Tesla, having the thought in mind that big companies take up so much loan to sustain, and which implicates him to think that Tesla is having a business with a huge interest rate. As though Michael Burry has been initially known for best with his predictions, there are also times when Burry was just completely wrong with all his claims, one of which was his bet against Tesla. He found it ridiculous that people were actually looking forward to the company rising more in the market. But the people were right when it rallied and rose to 700% in pricing from just a prior 500% jump before taking a breather in the month of April 2020. This just proves that you could actually surf through the adversities caused by inflation. But this doesn't also mean that you can ignore the key points to recognizing a crash. You don't know yet, but next time you could actually bet healthy, wisely, and correctly. Let me know how you think of Burry the next time he makes a prediction, and if you use the same 4 points mentioned earlier. Analyze and decide whether or not you'll be having the same decision as Burry's. So that's it for today. I hope you learned something from today's video, and to get updated with the next videos, don't forget to hit the notification bell. See you next time.